Okay, good morning, guys. Just opening up another platform. Just let me know if you can hear me okay. If you can hear me loud and clear, and we'll get started. Something's happened because the US has just got pumped after hours, so just trying to figure out. All right, so if you can see that there's anything's actually happened, just trying to find out. Yeah, okay, 65.41. So it looks like that's not what I want. If anyone could see. G'day, Lauren. No, mate, I did the stream yesterday morning, and I didn't do the stream on Monday. That's all, because it was mostly a public holiday. So, right, let's get into it. The US has just got smacked. So this is the futures on the 30-minute, and that's a 9 o'clock candle, and it's just opened up. So it's opened up around 26.332, dropped 300 points. So I don't know what's triggered that. If anyone can find anything on the news, just let me know, which is sort of negated any positive open we're going to have on the ASX. And if you see, so just be wary of that if you're looking to jump in to anything, because the US bounced last night, because that bounce is pretty much out the window now. Which you can see, this is copper. Copper got smashed. There's something I reckon's happened with China. The US dollar's been smashed. You can see that's the US yen up here on the top right-hand corner. That's dropped off all at 9 o'clock. So something's happened at 9 o'clock. The pound hasn't really moved. The euro has rallied. So the pound's got their own issues. They've got Brexit issues to concern with. So it's not just US dollar based for the pound. It's also pound based as well. So they're sort of copying at each side. Telegram refuses to talk about forced technology transfers. Okay. I'm going to have to get a better news service, mate. I'm going to rely on you from now on. Yeah, so it's bad news on US China trade fronts. Talks prompting risk off moves. Yeah, so look, the market rallied basically from the open of Europe session and into the US, because on the back of potentially talks, and they're going to come to some sort of agreement. They're talking it up again. It's the same stuff we've heard previously. But then towards the end of the session, China came out and said, or Chinese officials said, that we're not holding out any hope for trade talks. So that sort of capped the market. And now they've come out and said something else. So they may come to some sort of agreement to appease the market. And I think it's going to be more just to appease the market, not because they're going to come to some sort of like longer term agreement, because their core issues that they just can't agree on. I think that's going to stay the same way. They're not going to agree on it. So I think going forward, there's still going to be a bit of concern. And it's meant to be high level talks. I mean, don't be surprised if something untoward happens. It just doesn't come about. So it's meant to start tonight, 10th, 11th, Thursday, Friday. Yeah, it'll last for one day. Yeah, no, you're exactly right, Laura. So it's not, and it looks like the market. I mean, you could forget about most things of what's happened in the market. It's about the trade at the moment, and global growth. So if this trade war continues, which they're sort of expecting it, there's going to be expected or continued pressure on manufacturing and jobs. Jobs come out last night, or new jobs, and that's backing off. So the number of new jobs coming out is backing off. Now for the bears, it doesn't mean that the world's ending. It's just, God, it's getting hammered a bit now, isn't it? Yeah, the world's not ending, that's for sure. God, look at copper, because there's more than enough jobs out there. For anyone that's looking, it's when they come down to probably towards zero, there's a bit of an issue. But it does show that the labour market is cooling. Now Trump's calls for, he's trying to pressure. I mean, he needs rate cuts just to buoy the US dollar. To push the US dollar lower. So he needs those rate cuts, but you don't just give rate cuts willy-nilly. So it's pretty much against what data's coming out and saying at the moment. So the Fed's not going to, they're not going to wilt and just go, well, we'll just cut rates just to keep them happy. That's not going to happen. And so he doesn't look like he's going to end his trade war anytime soon. and I think it was a bit of a heads up the way he was trying to, what he was saying about the Fed and how useless they are by not cutting rates, they're stupid, da da da. He's used that sort of terminology many times, really negative terminology for a president of the United States, you know, potentially the most powerful person in the world, to say stupid things like that. It just goes to show that I think he's just not going to be a trade war, an end to a trade war anytime soon. There might be, like you said, some sort of minor agreement, which is just trying to buoy the market. But I think people are going to start to see through that, because when they can't come to terms on the major things, nothing's going to change. Anything else is just window dressing. So yeah, it looks like that's what's happening. The market's been belted on the open. Well, it's expected market to get belted on the open. It's SPY's now open. Look at that. So forget about the rally. This is about where we finished up. Excuse me, at 4 o'clock. We're about here. So we're expecting up 40 points or so. It's not going to happen. We're going to open down more than likely, and I think there's going to be a fair bit of fear out there. I mean, that market just got belted. I wish I was trading that. So was that? No. So actually, that's you can't trade that. The only thing it could be is that reversion to the mean style, but when you got reversion to the mean against a kind of a potential blowout, you're better off just staying on the sidelines until something builds. Here we go. So what I'm talking about is when you get a savage move either way, and that's well and truly against the MA. So a savage move like that, there is something to be said about buying it up. Momentum's down, but you need some sort of pattern. I mean, if it's a spike and you don't see it for any reason, then yeah. Or is a spike lower for no particular reason, yeah. But the way it is at the moment, with everything about trade, and they're coming out and they're saying, potentially there's not going to be any agreement at all. Like Lawrence said, probably barely a meeting is going to take place. It's going to be a bit of argy-bargy. They're going to say, that's it, we're going home now. And that's going to kill the market, I'd say. And that's probably what the market's is looking to factor in now, because if you're coming into the trade talks, we've been waiting for a while, and things are turning negative. They're not turning better, they're turning negative. So they might, if they come out and surprise, good. But, if they come out and surprise, expect to be bounced, but I just doubt that at the moment. So, if anything long, you'd be wanting some sort of confirmation like that, which I don't think is going to happen. And there's probably going to be some more news headlines. The only way I sort of see that popping up is more headlines, to try to buoy the market. Don't be surprised if Trump comes out and says something, and he's looking at the market, going to bed, going, hang on a sec, I've got to try to support it. Get the bailout group onto the case, get on Twitter. So, yeah, we'll have to watch, see just how the market opens. So back to the overall market. So the Aussie's under pressure, anything to do with trade, and you can see most of the US, the currencies bounced. They bounced a bit around, I think it was on the open, around 6 p.m. our time. They bounced a bit because the US dollar got knocked down a bit. Euro bounced. Pound really didn't move either. Most of the things reacted at that time. DAX opened up strong, but then they got sold off once the US dollar started rallying again. But the Aussie didn't really move up. It's moved down easily enough, and it's continuing to go south. So anything to do with trade is really just knocking the Aussie down. So we're looking at this sort of reaction back up. I think we put this on TradingView, and then when it got to about here, it's looking a bit heavy, and then looking for that rollover, which we marked up there. It did roll over, but you can see the chop that's coming in, and it is, it'll be tough going. If you take a longer term position, yeah, fine. But those sort of small scalping opportunities, you probably got lots of them, to be honest. But it is a choppy market, and we're still well and truly based around what's happening on trade. Pretty much the whole market is, to argue anything else, the market's moving the fundamentals. Company fundamentals could be fine. They could be going down today, more than likely going down and getting smacked around a bit. It's just, hopefully this is not going to blow out too much. And I'd suggest that they're going to have to, if they truly want this market to, not get knocked about over the weekend or going into the weekend, they're going to have to come out and say something and support it, you'd expect. So keep an eye on, is it Trump's Twitter handle, just to see if he does come out and try to support it in some way, or someone from the US starts trying to support it. So that's Dow. The DAX, if you're trading the DAX, that actually opened and went straight up. It's sort of consolidated around those highs into the close, but they closed prior to the US, well, about 1:30, 2:30 in the morning. 2:30 our time they closed, and I think the US market closes somewhere around 6:37. It's going to change soon because it's daylight savings, but they probably eased off into the close because of what China said about, no hopes, don't get your hopes up for the meeting. So they're definitely going to open down now. The DAX futures are going to get knocked around, so pretty much up 100 and something, or 300 points nearly over the last 2 days. Probably get knocked about. Yeah, you see copper getting smashed, and that's trade related. US dollar, that's US yen getting smacked. That'll be safe haven buying and US dollar selling. So that exacerbated move down. Euro's heading up, which with the euro was looking at the euro as potentially this is an offer zone. So if this gets a bit of an offer zone, I don't know why it's going up. It's maybe just US dollar based, but they generally on sort of they tend to fade. But we'll see. Just trying to get a bearing on that. So that sell off here, it's broken through sort of a minor support zone. It's bounced back up. You'd look at that as a bit of a shoulder or lower high off this, 1, 2, 3, 4 touches in a row around the 110. You'd expect that pressure potentially come in, but I think that news headline's just given it a bit of a nudge back up again, and that'll be because overnight talking of no rate cuts. So that sort of when they're leaning towards no rate cuts and not a lot of rate cuts in the pipeline, the US dollar bounces. So to the ASX, I'll get that up now. So this is, I'll go to an hourly chart just to make it a bit. I think we're going to get, I'll be concerned. I was looking at this level just a few minutes ago. There's an inside level here around 65.22, and you could probably see it a bit clearer here. You don't see that? So this minor level from yesterday, where the market's pushed down on the open, grind its way back up, sold off a bit, and I think this little pop into the close, only a minor pop into the close. If it gets through there, even take out this low, which is probably going to 65.20, it's a 25 point drop on the open. That's a turnaround of about 60 points or so, 65 points. We're expecting it up 40 now. We're going to expect it probably down a bit. Just see how that SPY goes. But if it trades through that, I'll go back to here. No, not there. Still under pressure. Yep. If it trades through there, that's going to take us through this low. Yeah, that's the 65.20, say, which leads me to believe a break through that low at 64.83, and it's what we were talking about a while ago. I'll go to the daily of this contraction. All right, so we've got this contraction playing on the daily, up, down, up, down, up, down, as we get buys stepping on the lows, building higher lows and lower highs with a lower high in here. Nothing's really 100% confirmed, so you're still getting that buyers and sellers coming into some sort of point of agreement now. It could be blown apart if we get through that 64.75. That would leave that'll be confirmed lower high. Buyers are stepping aside for now. I mean, why would you jump in when you got all these sorts of headlines, negative headlines in the last couple of days building up? Better off to wait and let the dust settle, and then it's going to bring into, this low right down and potentially a break of that low. Don't know what that support line's from. Yeah, does that make sense? So we've sort of got the concern today is it could be a massive breakdown. All right, and that's what I'm more concerned about than anything else. Is we push through this 65.20, which opens up a break of this 64.78. It's another 40 points lower, 45 points lower, and then to me, I would expect we're going to smash through that 6400. We're going to push through that. From there on in, that's a major trend break because you've got a big leg up here from pretty much all year. Sell off, okay, we bounce back, we're looking positive, and then bang, we start to come down. That's contracting this leg, and that's off the all-time highs. Don't forget it's 68.50 we pushed through recently. So we pretty much swept through those highs, reacted lower like we're talking about, and a bit of a washed them out. When you get a washout and start to get some lower highs forming, it's not a good thing, especially off a major all-time high level. So I'm a bit concerned for that today. Any new positions, we're not looking at new positions, I think, at all, just at the moment. I've got one on gold, which I'm probably going to take off. I wonder what gold's doing. Let me just have a quick look. I've got a long on gold, so I'll just go over that, or potentially a long on gold. Let's just see where the gold is at. XAUUSD. It's probably going to trade it. There we go. Off we go. Off we go to the races. Yeah, gold might trigger today, might trigger soon. So I'll go back to the daily chart, and this is the reason. So we've spoken about this quite a bit. You know, that pop down there, we reacted off that. We're trying to support, you know, on the bid zone. We popped up, washed out a few of these, you know, a few shorts that built up, built some longs, washed them out on that secondary move down, but they were so perfectly even, I guess. Yeah, that move down was equal to that. Well, this move down was equal to the initial move down. And that really, to me, is just a bit of a thrust through that bid zone. We've marked up as a bid zone through the previous lows, because if it's not going to go higher, there's probably going to be some profit taking. And it just depends on what happens once you get through there, whether it's going to be a washout or the start of a new trend down or whatever's going to happen. The problem is we started getting this retest, and I think we spoke about this also, a retest of this bid zone and start to lift. That's confirmation that that's more of a washout than anything else, and you're going to get an extended move higher. So I think a break of 15, 19, 20. I think we've got it at about 20, 20 and a half, 21. You know, entry with it's quite a wide support, wide stop, because it's off the daily chart, and that could easily trade up to 15.54 and take out 15.54, just depending. And again, the hard thing is it's not so much technicals, because technicals could look beautiful right up until Trump opens his mouth or China opens their mouth, and then turns the market on its head. So yeah, just bear that in mind. I think gold is probably going to trigger soon. I'll have to keep an eye on that. But yeah, that's the pattern that we've spoken about a few times. You've got, say, the press up, followed by 2 legs lower, a retest, and then this sort of action. That's what you expect. Okay, so that's the pattern. You've got 1, 2, 1, 2, high retest. Well, it's meant to be around in line with that. That zone there, which is, you know, the 1480 on the spot, and then the rally off that zone. As soon as that's confirmed, which confirmed the break through that high, which is about the entry, then you'd expect it to be next level up as the major 1554. Don't worry too much about this inside level. Of course, it could trade up there, react off, and then go again. But the strength in this type of, I guess, structure is quite handy. So hopefully that's going to kick off nicely. So we're probably going to have that long on. But apart from that, that's the only position we're looking at with regards to shares. No, keeping away. So we're down 2.4 already. So forget about opening up 40. Just look to see how it goes on the downside. And look, it could be holding up. We'll just see what sort of reaction continues on. So yeah, good day for a walk, Laura. I think you're right, mate. I've got my coffee in front of me. Don't expect too many alerts come out. But yeah, just it's times like this. It's really hard, because I know traditionally, and I'm not looking for. I don't want to be an extremist, but I don't know, anyone that's caught up through the GFC. That crucified a lot of people, especially new traders. And if you haven't lived through that before, it's kind of hard to it's hard to understand what happens. I mean, because your technicals and fundamentals just go out the door and they just get smacked. And there's potential for this to happen because it's been talked up for so long. You know, we're going to get all the bears are coming out and talking. And I mean, yeah, they could be wrong. It has been grinding higher, but there is that sudden shift in sentiment that could drive it lower because the fuel's there. The fuel's definitely there in the indices. You know, US and highs, we're at highs. You know, most markets are at highs, ready to blast off, blast down. So there is that risk of that outside event, which, you know, you've got to watch what the market's doing. You got to get a vibe from the market. You can't sit there and go, look, I'll buy cheap, because then you could have to put that in the bottom drawer for years. I mean, if anyone that did that on that sort of initial pullback, if anyone remembers the GFC, we'll go to it. Oh, the initial fall from the highs, it wasn't that savage, and then it bounced, and you would have got a lot of people. If you looked at the technicals, I mean, of course, it's in the past now. It's easy to look at it in hindsight. But you look at the technicals, it was pretty much glaring that there was some weakness coming in. It was a major change in the sentiment of the market. And the thing is, it's not so savage at the start because people don't cotton onto it that quick. And they've still got that mentality of, oh, buy the dips, buy the dips, buy the dips. That's fine. Buy the dips, but make sure your risk is tight, because you've got to have an understanding of what is happening in the overall market. And if you're forgetting, or if you're neglecting that, you will eventually get caught out, whether it's now, in 6 months, a year, or whatever. You'll get caught out, and generally that is more than enough to crucify any years of gains. Could really smack people around because they can give you a good opportunity with this pullback. You're looking at this, going, oh, I'm going to buy the dips. You bought into a dip, and then bang, and you just sort of think you've done quite well because it starts heading higher again. You start forgetting about it, and by the time you look at it, the market's down 300, 400, 500 points. Quick succession too, and that's what the GFC was like when things started turning south. There was no buyers in the way, and if you're trying to sell into that market, you're going to have a real rough time. And we all know what it's like when you don't want to lock in a loss. Anyway, that's my little sermon. I don't want to scare anyone. I'm just saying, try to. I mean, we've got some longs on. We've also got a short on, and we've got potentially gold on. So, in the way of hedging, we're not going to lose out. If the market proverbial craps itself, we've got a short that'll work out, probably 2 stop outs, and they're gains anyway, and then gold is going to kick off. So we'll probably make money on the way with this market goes down, with the potential of maybe getting a short on the index if that plays out. So I think just be cautious, especially with your shares, because dynamics can change quick from, I guess, a fundamentally driven market or a technically driven market to sentiment. And sentiment, when it's sentiment driven, it's a lot of the time it's on the downside. It's hard and fast. So yeah, let's see what plays out. The market's only down 4 at the moment. We're another few minutes to open, but the SPY seems to be holding here. This could be careful. Could have another leg lower if we get through, 65.11. It could really start to squeeze lower, which it may just do soon and really start to squeeze. There's going to be people always going to buy in that initial pop, look for that spike lower, going to buy, and then get caught out and have to get stopped out. So if you're going to go long, you want to be going long off a high low. There's no high low played out just here, and you want to make sure that market start to put into base. You don't want to be early. I mean, if you get early on to base, if that's your style, more than likely you've been crucified a few times trying to do that style, because it's not a high probability trading method at all. Open above resistance. Okay. Let me just see where we're at. Where's my gold gone? Oh, it's going. I'm going to have to look at what the CFD prices are, because this is delayed. Gold price is delayed on this, so I think we're going to trigger at 21 or so. Anyway, that's looking good. Let's look at the gold shares, just see what's happening here. They're not up as strong as what you think, and that's another sign, and don't get sorry for the ranting and raving, but just be careful about getting caught up in buying gold as a hedge, because I don't think buying a gold stock is a good hedge. I think buying physical gold is a better hedge, because gold will move. And a lot of times people they're just buying gold stocks because of the price of gold. Yeah, okay, but don't forget there's still people that just want out. If you're feeling the pain, a lot of people will tend to, if they're up on gold stocks and they're seeing others sink, they will be happy to take the gains and run, because sometimes they just don't move like you expect. And look at, you've got a couple that are actually down. Oz Minerals down, AQG down. They're not massive stocks, but others are not running. Newcrest it's break even to slightly lower. So don't be fooled just because of it. Gold is rallying now that the whole gold sector is going to take off. Just be careful. Again, you've got to trade from what you see, not what you think. All right. Anyway, that's probably it for me today. Good luck, guys. I just want to see what the market's nearly finished opening. It's only down 6 points at the moment, but that's it's a 40-point turnaround from what we expected. If we see US continue to sink, I mean, we don't get a bit of a bid come in during the day, then don't expect this market to finish up too pretty. Actually, I just want to see where it did open. I haven't got all the data there. There you go. So we're still, we've opened down, but we're looking at one stage. We're looking to open what, up here somewhere, 40 around 80, around this level up here, and then look to hold that higher low and then go back up. But instead, this looking like a lower high. You can see that expansion down, struggle to go up, and if it starts to expand down again, this is a level that we're going to be concerned about, below 65. And initially this therefore takes out low of 64,520, which is only 16 points away. Just err on the side of caution. But we're fully open. It's down 10. Just see what that SPY is doing. So it's a bit of, there you go. So maybe the SPY is going to wash out the lows. It could be trading down to 95. So it's at about 10 points. So that's suggesting that we're going to take out that low at 65.20 on the ASX. If that's the play, and the SPY, can easily do that. That's the next sort of key level. If it tests that level, it's cleaned out a few, pretty much all these longs that are built up. Just show you a bit clearer. It's built up all these longs, high lows, high highs, and then it's come screaming down. So anyone that didn't get out on the open is probably holding against you. They're going to put the squeeze on, and potentially it's going to squeeze a bit lower. Yeah, we'll just see. We'll just see. Anyway, guys, we'll call it a day there. Have a good day today. Good luck. I don't want to say don't do anything stupid, but just let the dust settle. If you're looking to buy into a bargain because we're sold off, just let the dust settle a bit. Remember, retail opens, pros close, and if the pros are not buying at the end, steer clear, I'd say. If you're not seeing some sort of bounce into the close, then just maybe steer clear a bit. Anyway, have a good day, guys. We'll speak to you hopefully tomorrow. Cheers. Bye.